Great, and you can go to the next slide. Welcome everyone. This is Frederick Winsness with NetHope, and delighted to welcome everyone to another NetHope Solutions Center webinar. And today we're having another webinar in the ICT for D conference series. We are pleased to have organizations such as GSMA, FAO, Fit Insights, and of course Catholic Relief Services with us today to talk about transforming agriculture through digital financial innovations. We have a panel that will be digging into that topic in quite a bit of detail. Before we get into the topic, just a few housekeeping rules. We want to keep this as interactive as possible, and we have scheduled time towards the end of the hour for some question and answers. So please open the Zoom chat window and post your questions there. You do that by clicking the chat icon on the bottom of your screen. And we are recording this, and please look for a follow-up email from us with the link to the page on the NetHope Solutions Center with the recording and all the materials are being presented here today. If there's particular questions that we're not getting to, maybe we'll also be posting a Q&A document there. So you should get all the information you need, and you should feel free to share that link with colleagues and others that might be interested in the topic. We're also, at the end, you'll see a webinar satisfaction poll. We certainly would be very, very thankful for you to take that poll to help us improve this webinar series over time. So if you can move to the next slide, Madeline. I want to introduce Sonia Rutzel. She is with Catholic Relief Services, and she is responsible for the ICT for D conference and the coalition that makes that a success year after year. So Sonia, I'm going to turn it over to you so you can introduce the speakers.
Thank you very much, Frederick. Thank you very much, NetHope, for facilitating this with us. Yeah, welcome everybody. So this is my pleasure to introduce you to our webinar. We will be talking about digital innovations, which in rural financial services have the potential to really be a game changer for achieving sustainable and agriculture and also global growth. And it's my pleasure to introduce you to our expert speakers who represent different organizations and different sectors, and will share their insights and lessons learned. So may I introduce you to Robert Kintu. He's the CEO of Fit Insights Group based in Uganda. Matthew Strickland, he's the Senior Market Engagement Manager for the Mobile for Development team in GSMA, based in the UK. Valeria Peschke, she's the Information Management Specialist at the Food and Agriculture Organization of the United Nations, or short FAO, based in Italy. And Sean Ferris, he's the Technical Director of Agriculture and Livelihoods at Catholic Relief Services, based in the US. So you can see we also have a very international team. And without further ado, we go to our first question. Each speaker will receive one question that they answer, and then we have some time for an open Q&A. So if you have any questions for our speakers, as Frederick already mentioned, please post them in the chat room. We really like this to be an interactive experience. So Robert, my question for you is, what digital trends and innovations for financial inclusion of smallholder farmers in the rural poor do you currently see, particularly in Uganda? Thank you.
Thank you very much for inviting me for this particular webinar. The trends within Uganda, I will just pick out of experience from what we have in Uganda. Mainly, we are seeing a lot of adoption of digital services that are within the country, especially in Uganda, or with the coming of the agency banking. A lot of banks have rolled out agency banking, and we're seeing more of the people within the rural area trying to access their accounts or trying to adopt the access of the accounts using the agency system. That is a positive sign, despite the facts that we have had before with the different banks before. Mobile money is out there, and the majority of the people are also embracing digital wallets as a form of payments. A number of circles these days are using cashless collection of payments to avoid people keeping money in their houses so they can actually save. Wallets are becoming one form of collecting money from people to be sent directly to the banks. And the majority of banks are embracing this. We are seeing a lot of the traditional banks twinning up with fintech companies to connect with some of the rural groups that are saving so they can bring in the money into the banks. Yes, there are still challenges, especially when it comes to the appropriate services that the different rural farmers are interested in, like credit. It's not that easy to get credit even within this particular system, because I think we need to collect a lot of information relating to how the farmers are behaving, who is trading where, and you know, some of our farmers are mobile. They will be in one crop this season and another crop in the next season. So that kind of information is still missing and creates gaps in developing appropriate products for the farmers. When it comes to the cost is still high. We hope that with the increase of the number of agents within the rural areas, maybe that will lower the cost of delivery of services. The issue of identification has improved, especially when they introduced the national ID and phone registration. Even if people may be mobile from one village to another, or the traders are moving from one place to another, at least they can be identified with the national ID, and their telephones are now getting a little bit of fix. They don't change numbers all the time. That is improving, and I think that to me is a greater advantage in the way we are going to be delivering financial services to the different rural communities. Whenever you have an identifier, it becomes quite easy. Yes, we still have challenges with connectivity. Not all areas are actually fully connected with the mobile technologies. Some are on and off. The signals are not that good in some areas, so people have to travel to get better connections. So it may be a little bit of a problem in some locations if we all move towards digital payment solutions. The ownership of phones is almost everywhere now. At least if we're talking about the feature phone, it's there. So that means for anybody trying to invest within this particular area, they have to also use USSD to attract the people that are using the feature phones, and not only those that can use the smartphones. There are advantages, especially with the smartphones, because they normally give more information and details, and the applications are normally visible for many people who are using it. But that is it's not a luxury. It's like a luxury for some of the smallholder farmers. They don't have that. They have the feature phone. So USSD would be the key aspect. So the additional cost that is coming up now is the element of training for people to adopt the technologies. There's a high cost on people understanding how to use the different functionalities that are there, especially when you start with the savings. It's a little bit of costly for many of the rural people. The other aspect that I would like to relay is the element of, on the side of the supply from the banks for packages. This is very relative. Banks will prefer now to work mainly with the cooperatives, and then the cooperatives do their own lending. Then it's mainly the collections that are being done with the wallets and money moving into the banks directly. But when it comes to lending, it has also always been within either the cooperative or following the individual who is actually interested in a particular loan. So we do not have specific products that are designed for the smallholders. Can you hear me? Hello?
Yes, we can.
Yes, you can hear me. So I thought I'd lost you.
No, thank you very much. are we good to move on to the next speaker, or did
Yes.
you have something else to
We
add?
can move on.
Okay, thank you very much, Robert. That was very insightful and a great introduction to the topic. And now it's my pleasure to introduce us to our next speaker, Matthew Strickland. He is with GSMA's Mobile for Development team, who are working on digital or economic identities. And Matt, for you, the question is, how can digitizing smallholder payments facilitate the pathway towards financial inclusion?
Thanks, Sonia, and thank you, Robert, for the introduction. Hello, everybody. So just to add a little bit of information, I work specifically within the agri-tech team here at GSMA, and we've been doing a lot of work on looking into the idea of digitizing payments for smallholders and how we can drive to our mission goal of increasing financial inclusion among smallholder farmers. So, as everyone, or I'm sure in the audience here today will be aware, in rural regions of developing countries, agriculture is the main cash flow or cash inflow for smallholder families. And as Robert mentioned, we also recognise that cash payments are risky and costly for both agribusinesses and for smallholder farmers. So we also recognise the importance of these cash inflows and actually see them as the entry point to financial inclusion for smallholder farmers, particularly where they do not already possess a formal economic identity. So there's an opportunity here for mobile technology to support the creation of these economic identities. When I'm talking about economic identity, we define that as the dynamic citizen profile that captures an individual's life events, assets, and transaction history. Economic identity is a form of functional identity that enables access to a specific set of services. And we contrast this with foundational identities, which are more like your government issued documents such as ID cards, passports, or birth certificates. So mobile technology can be used as an authentication and verification tool, and can also be used to aggregate a range of disparate data points that can ultimately be used to assess creditworthiness. For smallholders, the digitization of crop procurement enables them to establish an economic identity through transactional data from the sale of agricultural produce. When combined with other farm and farmer data, transactional data has the potential to open full financial inclusion to farmers, including access to credit, leases, savings, and even investment products. So by digitizing B2P or business-to-person payments, we can drive e-money or electronic money or mobile money into users' accounts and leverage this digital and economic identity for creditworthiness assessments. However, there's always a however. There is a pathway that needs to be traveled towards financial inclusion. If you can pop the next slide up, Sanya, please. Thank you. So initially, what we've seen is that farmers receiving payments into their mobile wallets are likely to immediately convert this money into, or this e-money into cash at their nearest mobile money agent. And this is the typical pathway to the adoption of mobile money. They want to feel the money they've been paid in their hands. New mobile money users will perform these transactions, as I say, at mobile money agents. However, as they become more familiar with the mobile money process, they may start actually leaving some money in their wallets as a, if you like, an informal savings product or savings facility, and even converting physical cash into e-money or cashing in. And this is what we see as they move along this pathway to adoption. So at some point they'll meet a threshold, the vertical dotted line on this slide, whereby farmers start performing transactions using the mobile money menu on their phone. So rather than relying on agents, they're self-facilitating these transactions, and therefore using the e-money that's in their wallet for a variety of transactions. The customer uptake over time, so the x-axis on this graph implies that more complex use cases will take more time to become established. By complexity, defining this the extent to which use cases require active participation of other ecosystem actors. So for instance, P2P or person-to-person remittance are more complex than airtime top-ups because they imply transfers between two active mobile money users. Merchant payments, buying groceries or equipment, are more complex than bill payments, utilities and school fees, because they require support of small retailers as well as support of corporate or institutional actors. So as we move along this pathway from left to right, we're seeing farmers developing financial profiles or a formal economic identity. These records, or the records of these digital transactions, when combined with farmer data, so for example, landowning, production data, etc., create a powerful digital profile which can support farmers to establish creditworthiness and benefit from derivative services. So for example, data-driven credit scoring models can be used to provide loans, crop insurance, and eventually open up to full financial inclusion. You can just move to the next slide, please. And again, as Robert mentioned, of course, this relies on a foundational ecosystem and a number of supporting activities to help facilitate progress along this pathway. So below the line marketing campaigns, or BTL marketing campaigns, visiting villages, plantations and districts to educate farmers on the various financial services and alternate use cases that mobile money offers. But also a network of rural and farmer-friendly agents. Ideally, these are agents that are known in the community and known to the farmers with sufficient float to facilitate cash outs. And to support this, forecasting is really important, and also addressing liquidity gaps with the assistance of master agents. Where we're working at the moment, we've identified that certain value chains tend to lend themselves better to digital payments, certainly as an entry point due to their formal structure and the frequency of payments. So more frequent, lower ticket value payments help provide a better business case to mobile money agents by reducing their liquidity burden. So in summary, smallholders can't be expected to adopt derivative services, particularly through mobile devices, without first building trust and familiarization with mobile money services. These digital transactions are prerequisites to building the economic identity through which creditworthiness can start to be assessed.
Thank you very much, Matt, for the insightful introduction and insights to digital ID. I'd like to introduce our next speaker, Valeria Pesce from FAO. Valeria, the team where you work in does work on capacity development, on agricultural data management and data sharing. And recently you went into farmers' data, and that includes, of course, also data used for financial services. Can you explain a little bit more who is the audience of your course, and could you also please give us some examples of things they learn that might help them in dealing with digital financial services? Thank you.
Thank you, Sonia, and thanks to the presenters before me who gave a very good overview of the topic. I'm not a specialist in this topic, but at FAO we work on capacity building. Normally what we do in this team is, as you said, capacity building initiatives on agricultural data management in general, on different aspects of capacity of agricultural data management. In this case, in recent years, we have collaborated with the Technical Center for Agriculture and Rural Cooperation, CTA, in a project called Good and Action, funded by the UK DFID department. And we worked especially on capacity development, and we developed several courses. And now recently we decided to join efforts with Pan-African Farmers Organization, PAFO, for this course on farm data management and sharing. And the topic is farm data management and sharing, and of course the services that can be built on top of this data, which of course include also digital financial services. Your question was about the audience. The audience, of course, the primary audience is all professionals that deal with farmers' data, with farm data especially. I mean, it's a farmers' data in that it is their personal data, but it's also especially farm data, farm production data. And it could be stuff, for instance, of farmers' organizations that manage farmers' data, that manage farmers' profiles. It could be stuff of NGOs that support farmers with the managing of their data. It could be also stuff of precision agriculture suppliers or other companies that deal with data from the farm. And of course, one example would be also stuff from financial institutions that work with farm data. In addition, we also think that the course is useful for farmers themselves. We primarily target farmers' organizations as intermediaries, but the course also aims at building, raising awareness among farmers about the value of sharing their data. Let's say the benefits of sharing data, and as well as the rights that they have on the data that they share. At the moment, we don't expect farmers to be a substantial part of our audience, partly because they don't deal with the data directly. It's usually intermediaries who deal with the data. And also because, especially for the farmers that are the object of our activities, which is especially smallholder farmers in developing countries, there may be language barriers or connectivity barriers. And of course, we also expect the course to be of interest to development agencies. They decide on funding and investments, they advise farmers. So it's very important for us if we want to see the uptake of the best practices that we describe in the course that they are interested. Some quick examples of how this could be useful in the area of financial services, of digital financial services. There is a lot of exchange of data in digital financial services. As also Matthew was saying, the data from the farm is becoming essential for the risk management part of financial services. So it's not only the usual data like personal data, national ID, location, and even the credit history, but it's the data that comes from the farm and that demonstrates the farm performance that is useful for financial services. So the course covers, for instance, for farmers, it's useful to understand what data they might ask to share for benefiting from digital financial services, the way in which this data is managed, and the course covers the way that farm data is managed throughout value chains, and the rights that they might have and they could negotiate. An example could be, once your data is shared with a bank, you don't know the use that the bank is going to do of this data. So being aware of your rights, of the fact that you can limit the reuse of the data is useful also for farmers and for farmers organizations, especially on behalf of the farmer. On the other hand, also we're thinking of, for instance, financial application developers or data managers in financial institutions can also learn something about not only the technical aspects like the data that is managed, how to manage the data, but also about legal aspects, ethical aspects, and the rights that farmers might have on the data policies. This also builds trust among farmers in the idea of digital services. And there is there are gaps in legislation, so there is a lot also to learn about good practices that are not covered by legislation, but could guide people who manage farm data. I hope this answered the question.
Thank you very much. I have also shared the link to the course in the chat box to the right, which is also the place where we like to ask everybody to share your questions for Valeria or any of the other speakers. But before we go to our Q&A session, we have another contribution from my colleague, Sean Ferris. And Sean, I would particularly like to ask you to share some of your lessons learned working with CRS or previously on when designing and implementing digital financial solutions for smallholder farmers. So over to you, Sean, please.
Great, thanks very much, Sonia. I'd just like to paint a little bit of a background to the work that we're doing and to describe the situation we're trying to fit the digital financing into. I think CRS, along with many of the organizations working in agriculture, have spent the last 10, 15 years getting better and better at doing value chain work, as Matt was saying. But I would say that we're not doing a great job at sort of fitting the financing systems into that. And I think, regardless of what we're all saying, it has to be said that agriculture is a super risky area to invest, and that's why a lot of people are not doing it at the moment. And I think, as people have said on this meeting, we've really got to find ways of using digital to de-risk that market and see how we can fit the right types of products into the right types of value chains. There's a huge gap in financing. Some of the calculations suggest that it's like $150 billion in smallholder farming that is not met. And when you look at the different types of farmers that we work with, they can get sort of finances through savings, a little bit through microfinance, but there is a big gap then between what those types of providers can offer and the formal financing. So a lot of the work that we're looking at then is looking at this gap, I would say, somewhere between sort of $20,000 or $10,000 up to about $100,000, $150,000. And that is an area that most financial organizations are not very keen to dip into. And the reason for that, it needs a lot of technical assistance alongside the financing in order to make that area of the financial systems work. So just to give you an idea of the landscape of the clients that we're looking at, 70% of the types of farmers that we work with are unbanked. They are not regularly engaged in markets, and they have about 99% of their needs are not yet met in the financial services area. There's about 20 to 25% of the farmers are in what are called these loose value chains. So they are engaged in markets. There's a high degree of informality still. And those farmers also very high sort of need in the market that is being unmet, let's say 80%, something like that. And then there are farmers in what are called tight value chains, which is what I think Matt was referring to. And those people are working with this intersection between informal markets and formal markets. And I think that is where we're seeing at the moment the greatest level of digital financial systems playing a more effective role in getting financing to farmers. So I still think that, some of if you look at over the last 10 years or something of what's really been happening, we are certainly seeing a lot more digital services coming into the agricultural market. As Valeria has said, a lot of education work, and increasingly that focus is on providing financial education, management education, so that farmers can not only think about producing for X market, but they can also work on the ideas of being able to understand the risks and the financing of things. I think it's important to note that most farmers that we deal with are already carrying some level of debt. And this idea of providing people with new ways of getting financing or increasing their level of debt is a perilous thing unless they get good technical support in order to really be able to manage and navigate the use of that financing so that they don't fall into further poverty traps. So from our side, I would say that sort of key lessons are financing remains a critical gap in terms of the way that we do value chain development. I think that we need much more technical support to all of the actors involved in whether it's NGOs or working with digital service providers and the banking systems to make sure that the financing is being provided to people who know how to use that effectively. I think the really important thing, or the clever thing that we're seeing about the digital approach, is that traditionally financing has been a few products or a few financial instruments going to a large market. I think in agriculture, it has to be the other way around. We have to have very customized types of products that go to specific value chains, specific almost country environments, and to particular types of farmers. There has to be an ecosystem of service providers to support that. And I think, as previous speakers have said, if we are able to identify the client more clearly, if we're able to design financial products using digital systems to target the right type of market and the client, I think that does provide us with a much better way of de-risking these markets and enabling us to learn how to finance specific types of value chains and client groups. And from our side, I think, the key message really is learning about the instruments, learning how to work with that ecosystem of financial providers, using the digital tools to get the right types of products to the right types of clients. And let me stop there.
Thank you very much, Sean. Yeah, now we have some time for Q&A, and thank you very much for already posting your questions. You can still post them now, obviously, while we chat. The first question we received is for Robert. Robert, the question is, can you please expand on what role farmer co-ops play in these financial services relative to training farmers and awareness of these services? Robert,
hello, thank you. Yes,
yeah,
I've got it. Thank you for the question, I think from Frederick. Yes, the role of cooperatives in digital financial trainings, I think to me, I would like to say that one thing that we need to remember, Fit Insights is actually working with cooperatives. We collect a lot of data from the cooperatives. They run a platform with us, and some of the cooperatives actually are very useful in giving identity for the farmers and also being able to negotiate the different services that you have. You may introduce some services to the farmers, especially these financial packages, but the cooperatives provide the acceptance. If the leadership can understand and explain it to their members, that is a very good role that a cooperative can offer. The other part is normally to negotiate the packages or the services that you're likely to offer, especially I think one of, I think it was Valerio talked about collection of information. When you are collecting data, many people will think about issues of taxation and other aspects. So acceptance of the method of collection or the kind of data you are collecting, when people sit within a cooperative, they can actually come to consensus on what kind of information they're providing and for what purpose. The other part that a cooperative can do, farmer cooperative can do, is the knowledge accumulation. When you provide a cooperative with a platform and they have access to this information, they start accumulating knowledge about their own farmers. Although this may require a little bit of explaining or teaching them how to dig out much of the information that they have in terms of either production, how it relates to the financial package that they can offer their farmers, or the insurance package that could be given to the farmers. The other aspect is tailored coaching. Even if we provide digital wallets, like with the Mali card, we are providing a digital wallet, which is a Mali port, and then a card, which is a physical, like similar to an ATM card. It's a pre-debit card. The farmers need some tailored coaching. If at least 5 people within a cooperative can actually use the card and have used it properly, they can tailor other people and coach them on how to use the card. The other aspect is assisted access, especially when people are looking for added value services like insurance or pension. If they're added onto a wallet, many of the farmers will need assisted access. We do not expect, because not all of them are fully educated, even if they have reached S4 or S6, their level of understanding some of these particular packages or services may be limited. So assisted access through a cooperative where you have a few people who can actually interpret the services and then bring them out into the language that people can understand is very important, and I think this role can be played by the cooperatives. Then the other aspect, I think already mentioned by Sean, was the aspect of increased financial education. As we introduce these services, I think more is needed on the financial education. The cooperatives could do a role, so having TOTs to the cooperative leadership, and then they can actually have those skills at that level, will help on the spread and the adoption at the lower level. Thank you.
Thank you very much, Robert. Malaria, we had a similar question for you as well, particularly looking at if there is materials available for farmer co-ops or farmer groups or farmers themselves. And yeah, if you see sort of the need for peer learning on the ground for take up on these services, if you can maybe expand a little bit on that. Thank you.
Thanks, Sonia. Yeah, I was mentioning that we have, I mean, didn't foresee farmers directly as an audience for the reasons that I said, because this is an online course. There may be language barriers, there may be connectivity barriers. So we normally see farmers organizations, cooperatives as more of a target than individual farmers. But of course, in the field, having capacity development initiatives that go directly to the farmers, I think it's definitely an area. It's not exactly what FAO does, but it's definitely something. As I said, there is a big potential for farmers to understand the reasons why they share data, to understand the data that they share, and how, for instance, in the area of financial services, how exactly they work, because there is a lot, from what I understand also from people working in that area, there is the risk of lack of trust. And what Robert was saying about the role of the farmers' organization or the cooperatives about acceptance is the same lessons that we learned about the role of farmers' organizations in building trust from the farmers. And then that is their role, I think, going directly to the farmers in the field. And you were asking about material directly for the farmers, not from FAO. I think CTA is working more on that, and they have a direct link with farmers' organizations working directly with farmers. I don't know if there is some participant from CTA who wants to add something about that.
Maybe to the other panelists, is there anything you might want to add in terms of material, educational material, awareness material to farmers? Okay, I don't know, Sean, if you had any insights of that.
I think what we are seeing is, with this whole access to information through different digital services, is that we are seeing a lot more people now developing these kind of microbyte video training materials or capacity building ideas. And that really helps, I think, farmers to start to get insights into what others are doing, what farmers like them are doing. And I think that, capacity building now, it has moved into this whole new sort of realm of rapid video, really, small pieces of information that people can look at and repeat and share with others. And I think financial sort of inclusion ideas, are an important part of that. As I say, I think farmers would like access to finance, but everybody is wary of taking on more debt. And the more that people can learn about the processes, learn about the different options that they have, and also, the different service providers learn sort of more about how to help and assist with these processes, I think that just encourages more people to enter into the space.
Thank you very much, Sean. Matthew, the next question is for you. The question is, the identity you were discussing, is that tied to a mobile wallet, and does that allow for cross-mobile network operation transactions? Like, for example, might a farmer be able to pay someone from Airtel to MTN?
Okay, so I'm going to answer the second bit of that question first, because it's easier and quicker. So already in many markets, interoperability, as it's called, exists. So you can make payments from cross network. So from a example given, Airtel to a MTN wallet, that already exists in lots of markets, not all markets, but lots of markets. And also this idea of an agribusiness or a plantation or a co-op using a bulk payment facility offered by one of the operators, they can still pay into different to wallets, farmers on different networks. As far as the ID element is concerned, actually mobile numbers or MSISDNs are not always the best unique identifier to use, because people lose phones, and in lots of these markets, people are swapping SIMs in and out or have a dual SIM phone. So to kind of structure the answer a little bit better, often when you open a mobile wallet, you will have to show some form of foundational ID. So one of these sort of government issued IDs like passport or national ID or whatever it may be. And these are more static IDs, if you like. They're fixed and tied to the person. Mobile numbers, yes, lots of people hang on to them for a long time, but they can be a little bit more dynamic. So when we're talking about ID and creating these economic identities, what we're saying is that mobile money usage is just one silo of data that can help build up this profile. So I've worked on estates where these farmers have been supplying the business for 10, 15 years. And all of that production data is sat on a server or on a computer within that agribusiness idle, effectively. So maybe, you know, the agribusiness is looking at historical peaks and troughs in terms of production, but it's sitting in isolation. So what we're saying is, by combining that production data with mobile wallet usage, with GSM usage, so text messaging, call usage, locations of where those services are used, you can start to build up this economic profile. But the actual identifier, unique identifier, is better if it's one of these static pieces of information. And also, Valeria touched on this. There's obviously lots of regulatory issues. I'm not going to get into the regulatory debate here, but there are lots of issues about what information can and can't be passed on. There's a whole stream of work around informed consent of farmers understanding and knowing and giving consent to what information is or is not passed to third-party providers. But just as an example, if you're an operator working with someone offering some form of credit facility, then you can't, there's only certain information you can pass on. So the mobile number not being one of those, so that is protected, the names are protected, but you can provide a unique identifier with some usage history, and that can be fed into the algorithm of this credit provider. So the short answer is that mobile number is not the best ID to use or unique identifier when merging all of this information together.
Thank you very much, Matt. I guess related to that, we had a question about how we can improve sort of cross-sector partnerships and data sharing, which you obviously also touched upon. So I wanted to see if maybe any of the other panelists would like to add any of their insights or thoughts on how to improve this cross-sector partnership. Robert, can I maybe ask you first to contribute to this question?
Hello, you can hear me again?
Yes, now we can hear you. Thank you.
Yes, the question was about partnership with the data. I lost part of the. Can you come again with the question, please?
Sorry, yes. If you had any other thoughts on how to improve cross-sector partnerships or data sharing for more successful, digital financial solutions in this sector.
Yeah, thank you very much. Sorry, the network cut a little bit. Yes, in terms of improving sharing of data, I think to me is that we already they have talked about that we do not have enough regulations on what can be shared among different players. Now, when we talk about inclusive financial services, we're talking about additional packages, value-added packages to the smallholder farmers, and being able to access these solutions within either a mobile phone or from one platform. Now, that requires a lot of data sharing from different parties. For instance, if we are trying to introduce micro insurance or health insurance via the mobile, or pension contributions from the rural farmers, there's going to be data sharing between the underwriters, the insurance firms, the mobile companies. All this is information that has to be shared. But the mechanism on what can be shared is we need to think about that. Different players have to actually be able to relate in that aspect. We have experiences whereby we are working with different players, but it takes long for them to actually, the regulators to agree on what has to be on a particular platform, or what should not be displayed, or where should we display certain information. So it's important that for the different service providers to be able to reach out to the smallholder farmers or to the people in the rural areas. I think at that level, we need to sit and agree on what can we share to reach the last mile, and how are we going to protect that information from other people that may use it in a negative way, especially if the fintech or the company developing a solution is smaller. It's very difficult actually to convince some of the other people that are holding some of the services to move them down because they are not sure of your capability to handle certain data that is coming from a particular segment. So I think, to me, the element here is knowing what can we do with the data we have, what can we share, what kind of arrangements do we have between the different players to be able to share that data and protect the end user, who is actually the smallholder farmer and who may not even have knowledge of what their data is being used for. So those are some of the things I think we need to think about as we design any solutions moving forward. The other aspect I would mention here is that as we move forward, we notice that I know that it was mentioned by one of our colleagues talking about, that was Matthew, when he talked about adoption of different services along the pathway. Increasingly, farmers will adopt services which add value to them. Let's say micro health, they will adopt it and they're willing to pay as a deposit when they are paid for a crop. But that will happen as they start trusting the system. And when they start trusting the system, the money also starts remaining more on the platform, and you see more people leaving money on the platform when they start trusting the system. So even the ability to share information from that person increases. Whenever they trust you, they will share more information. They're willing to offer more information as users of the service. So I think for the starters, we need to start with less information and then keep on getting additional information from farmers that will be useful to develop packages that are tailored to some of the user groups. Back to you.
Thank you very much, Robert. Valeria, I also have a related question for you. You mentioned earlier ethical and legal issues, and you said that they're not all covered by legislation. How are actors regulating themselves, and are there cross-sector collaborations on best practices?
Thanks for the question. Yes, actually, when Robert was speaking, I was thinking that I should say something about that, because it's actually following what he was saying about not knowing what can be shared, agreeing on what can be shared, and the need for, for all actors to understand what they can do in this area. So since the question was also to Robert about partnerships, this is not in terms of formal partnerships, but in terms of collaborations and working together across sectors to agree on best practices, etc., on how to share data. You may be aware that there are initiatives, that there are different groups of actors that are working on shared codes of conduct. There are some that are regional, like the European one, some that are national, like the US one and the New Zealand one. It's a consortia of different actors in the value chain. Normally it's farmers' organizations together with agribusinesses and also precision agriculture suppliers. They come together and they agree on a set of best practices, a code, let's say, of principles on how data should be shared, without damaging any actors, and especially without damaging the farmer. I mean, the focus is on building the trust of farmers and making them understand their rights when they share the data, what they can do, also the clauses that they can negotiate in contracts. So I think these initiatives are very useful to answer what Robert was saying about understanding what can be shared, how can data be shared. And there is also, one of the latest documents from the Global Forum for Food and Agriculture, they had a communique in 2019 asking for international coordination and collaboration on guidelines on this. They were calling in particular on FAO to take a role in this and to coordinate efforts on general guidelines, for everybody, for all the actors to share farm data.
Oh, wonderful. Thank you very much. Matt, we also have a very specific question around data sharing or specific data. So the question is, GSMA being involved everywhere globally, did you map out any high-value tools and in which regions they are available? And then the second part of the question is, I mean, there are great examples out there from AgriWallet to Uber of agri-equipment, but it's very scattered. And if there's maybe a place where anybody could see which digital services show great impact or where there's potential, are you aware of anything like that?
Okay, so I promise this isn't a planted question, but we are we've had an agri tracker which is actually being updated as we speak and relaunched in the coming months. So yes, you're quite right. There are lots of really interesting new models out there. Obviously, Kenya is a big hub for innovation, but it's not the only one. So there are really interesting use cases that we're seeing globally. I'm not gonna, there are too many to list at the moment, but what I can say is we are in the process of updating our tracker and creating an agri-innovation map, which will be launched again in the coming months. But happy for you to reach out directly and we can update you on that with more detail.
Excellent. Thank you very much. We can share further information after this webinar in a summary and including the links as well to the project mentioned. However, I guess final question I'd like to ask to Sean, and I think it's also a very difficult one, sorry. Several of you mentioned the fact that users and farmers need to trust the system, but how do you establish this trust? Sean, do you like to try to give us an answer?
Okay, that is a tricky one. I think that a lot depends on what people are actually trying to do. I think if you're trying to provide digital services that is directly to the farmer, I think building this idea of trust is all around, is the information they're receiving really relevant? Can they act on it? If they act on it, do they get a positive response, whether that's production, organization, or markets or finance? So I think that's just a question of using these technologies. I think a lot more of the products that we see on the market are actually going to farmers through some sort of intermediation. So it's either an agent or it's going through a cooperative, or there's something or somebody who is able to access the service and then work with individual farmers. And my sense at the moment is that building trust is done very well through those agent models, because not only do you get access to the technology or the service that you want, but you've also got a trusted partner, a real person who can help you to navigate that. And at the moment, I think that whilst everybody would like to get to the self-service idea, I think just because, again, it's risky, it's new for a lot of people, going through this intermediation agent, somebody who really knows the system, can advise you on what the best decisions are. That, I think, is the quickest way to gain trust. And I think that is proving at the moment to be the most successful way of getting products out to people.
Can I also just jump in here? It's Matt here. Sorry to
please do
to
yes.
jump in. Totally agree with what Sean's saying, and one of the things I touched on it in my opening statement was this idea of having agents who are known within the community. So rather, we've seen, not necessarily with mobile money, but with other projects we've worked in, where you have more mobile agents who are, by mobile I mean moving between different villages or different zones where they're not known to the local community. It's much harder to build trust. So by leveraging these existing mom and pop stores and local shops and converting those guys into agents. You know, they already have a relationship with the local community. Another very quick example was, again, in previous projects we've worked on with delivering agri-advice or agronomy advice to farmers through mobile services. You know, lots of times we heard feedback, I don't like the content because what does telco A know about agriculture, or what do they know about health? So by bearing in mind the fact that all of the content has been developed with Ministry of Ag or Ministry of Health input and approval, by simply adding that sticker, if you like, that it's approved by the Ministry of Ag, Ministry of Health, actually made a massive difference in terms of the uptake of those services and people trusting the content. So I appreciate it's not specifically linked to mobile money, but being able to validate where that information or where that service is coming from was really, really useful for us.
Thank you very much. That's very correct. Are there any other additions to that question or any other comments?
Just to add to that a little bit, I think in agriculture also you've got to think about things being long term. You know, it's not that people can test something and, you know, that is the solution. Everything that we're doing takes several seasons, and so my sense is that there has been a very rapid sort of exploration and uptake of all these various types of technologies, but at the moment they're still fairly immature. And you know, it will take time to really integrate these systems into the communities. But I think, as Matt has just said, this idea of a local trusted agent that helps you to navigate that is definitely accelerating that process.
Thank you very much. This is now already the end of our Q&A part. So what I would like to ask each of the speakers now, and I will go the order of how I see you on my slide. So Robert first, then Matthew, Valeria, and Sean. May I please ask you in like 1 or 2 sentences to either share your key lesson learned, or maybe a call to action, or maybe kind of like a statement about the future to wrap up this webinar. So Robert, may I ask you first to share your sort of key takeaway?
Thank you very much, Sonia. One of my key takeaway from this, and especially what I'm seeing, is that whatever we want to do or whatever we are doing, we know it's going to take time, but technologies are taking us up. We'll have to embrace the technologies. We are seeing this already happening, especially with the youth in Uganda. The majority, even when they have not been to school, the way they are using the phones is totally interesting. So we need to find a way on how to involve solutions using the mobile technologies, whether we like it or not, because they're going to be forming part of the future of what we do and how we do things. The other aspect about how we plan to use data that we are collecting from the different centers of the data, like in production, transaction, and all this market information. We need to understand now how are we going to use this maybe to inform the future, but at the same time, as it's accumulating, how are we going to make it productive for the people that have actually provided it in one way or another. So these are some of the things we really need to do as we move forward. For companies that are within Africa and especially Uganda, if I may speak, I think we need even to have more people educated in data science, interpretation of information, helping people to understand some of what is happening, because we are going to be seeing more people missing out on access to services if everything becomes digital. So we need to help them and find a way on how we can actually educate many of the people. Thank you very much.
Thank you, Robert. Matt, what is your final comment, please?
Okay, so we often talk about multiple stakeholders, and none of this is possible in isolation. There needs to be multi-stakeholder involvement, and I think it's just a practical point I want to leave here is that making sure stakeholders and the timing of events are aligned to maximize benefits. I've seen and been involved in projects where, for instance, there's a bulk sign up or opening of accounts, but other stakeholders aren't necessarily ready to take the next step. So people they've been trained, they've been educated on let's say how mobile money can be of interest to them. Then there's a process of opening wallets, but then the actual digital payment, that process, because of a document hasn't been signed or systems aren't ready, payments don't take place the following week or 2 weeks later. There's a 6, 7, 8 week delay. So it's this idea of, yes, we need the different stakeholders, but making sure that the logistics are pre-planned and the smallholders don't have to suffer yet more projectitis, where they've been compliant and done one element, but then let down on another element. So making sure that your ducks are in a row before committing to the ground, I think, is really important to help build trust, reduce frustration. It's much harder, leverage that momentum that you generate, and don't keep dragging these poor smallholders through excitement and then desperation as these projects sort of ebb and flow with success or not. So I think it's a plea for making sure that we're aligned as we're deploying these projects.
Thank you, Matt. Valeria, what's your final comment, your final sentence to share with this group?
Yeah, I would very briefly just reiterate the importance of trust, which was discussed several times today, and therefore the role of trusted organizations like farmers organizations, cooperatives, and, as Sean was saying, trusted agents. And there is a role there also for capacity development, because that builds, confidence.
Thank you. Sean, would you like to add anything?
Yeah, I think, again, this idea of accessing debt is a great idea, but I think it's, there are challenges with that unless people get good advice with it. And I think that's an important thing always to think about. And I think as others have said, if we're going to, we have not been good at integrating finance into value chain type projects. I think this is the decade where we really have to make that integration work. And that, I think, needs different ways of constructing projects. So we just have to look at how we make these kind of investments with rural communities. And I think we have to think about new approaches to that if we're going to bring financing in effective ways to large numbers of farms.
Thank you very much. And thank you very much for this great summary and also for the very insightful discussion. So thank you, Robert, Matthew, Valeria, and Sean, and thank you very much for NetHope for hosting us. And I'd just like to say we reconvene here on the 12th of November for our next webinar, which will be about water security and digital innovations. And obviously we also will be starting soon to open the call for speakers for our next ICT4D conference, which will take place in April in Abuja, Nigeria. So looking forward to meet back with this group again soon. And thank you very much for joining us. Goodbye.
Thank you very much, Sonia and all the speakers. Want to encourage everyone to please answer the webinar satisfaction poll. Thanks for all the great questions and the insights. Just one last comment from me. Your focus on the target populations and on the ground seems, in terms of building trust and maybe also provide solutions, might point to there need to be local solutions and local innovation for local problems. And maybe that's a topic for a whole other webinar. Have a great rest of your day, everybody. We will be back in touch soon. Take care. Bye-bye.